Consumer insolvencies are 14% higher than they were exactly 1 year ago. And that's 34% higher than pre-pandemic levels. What does that tell us? That the financial pressures people are feeling are very real. But lenders are still lending, governments are still announcing housing programs, and mortgage products offering greater flexibility continue to grow. So what does this actually mean for homeowners and home buyers? I'm George Douzenis from Dominion Lending Center's Expert Financial, and this is your weekend mortgage brief. What changed? Why does it matter? And what should you consider doing? Let's get into it. Nationally, consumer insolvencies increased by more than 9% in a single month and more than 11% compared to last year. Here in Ontario, the annual increase was 14%, and most of these weren't bankruptcies. Roughly 3/4 were consumer proposals. A consumer proposal allows someone to negotiate a structured repayment of their debts. It can provide relief, but it also affects their credit and may limit their future mortgage options. So for homeowners carrying substantial credit card or line of credit debt, refinancing is an option that we use with our clients to help improve monthly cash flow. So for example, let's say we're dealing with a debt of $60,000 of unsecured debt at an average interest rate of roughly 15%. That equates to about $750 a month in interest alone. But moving that debt to a lower rate mortgage could reduce monthly carrying costs considerably. But the debt hasn't magically disappeared. It's been converted from an unsecured debt into a secured debt against your home. So working with us, what we try to do is create a strategy for you, because the worst thing that can happen is to pay off all of your debts and all of your credit cards, and then they get racked up right again, and you can actually end up with a much larger mortgage and another pile of consumer debt. And our strategy and our goal is to avoid that. We want to help out families so they can actually grow and prosper and eliminate that debt or move that debt and manage it responsibly. A responsible debt consolidation refinance should do 3 things. Meaningfully improve monthly cash flow. Include a plan to prevent debt from rebuilding. And if alternative or private financing is required, it is imperative that there exists an exit strategy to exit that product. A private mortgage should be a bridge, a bandage, not a permanent solution. If debt is becoming difficult to manage, have that conversation early. Waiting until payments are missed and the mortgage renews in 2 weeks really limits our options. So get on top of that early and let's have that conversation. Our second story comes from FSRA, and FSRA is the regulator for Ontario mortgage brokers. FSRA refused to renew a broker's license and actually revoked the brokerage license and imposed an $85,000 fine. The cited problems included inadequate supervision, missing mortgage records, and inaccurate license renewal information. This wasn't a new regulation, it was simply the enforcement of existing obligations. So at the end of the day, why should you care, the consumer? Because a mortgage recommendation should be supported by more than just a low-looking payment. Your file should explain why a particular lender or product was recommended, what risks were disclosed, and why the mortgage was considered suitable. In the world in which we live in today, suitability is it's a really important factor when we are working in this business. Because it's imperative to do our fiduciary duty to find a product that matches your suitability needs. Now, a broker may remember the conversation perfectly. Unfortunately, simply saying that, George remembers is not generally accepted as a regulatory filing system. Proper documentation protects the borrower as well as the broker. Something we do at Expert Financial is clear, documentation to protect everyone involved. Our next story comes from Manulife Bank. Manulife Bank reported that their mortgage portfolio reached an astonishing $28.7 billion. That's about 12% higher than it was last year, while non-performing residential mortgages lagged pretty low at 0.19%. This doesn't mean Manulife has loosened its underwriting or that every application now receives an approval and a fruit basket, but what it does suggest is that there is a continued appetite for residential mortgage lending. One of the draws for Manulife and why many clients decide to take it is because Manulife offers the Manulife One product, where it combines mortgage debt, income, and everyday banking into one overall account called the Manulife One account. And it has the net benefit for some clients to help reduce the amortization. So imagine having like a mortgage that will get paid off in 20 years. And if the income is good and the debts are manageable, maybe with a Manulife One product, because of how they calculate interest, that can actually be reduced down to maybe 7 or 10 years or 11 years. So it creates a product, an environment where the homeowner can actually can tangibly see the end product of, like, the end lifespan of their mortgage, and being able to throw their hands in the air and say, wow, I'm completely mortgage free. So the Manulife One product is very attractive, and we do actually illustrate more examples in our Manulife One webinar that I do every so often. Now, that being said, is the product for everyone? No, absolutely not. Having this great, incredible flexibility and having non-disciplined spending habits can actually spiral out of control with a Manulife One product. So it is something, again, that we would figure out in our discovery call when we're trying to figure out the best options for you. Remember, the mortgage product is something that should fit someone's habits, not trying to change their habits or following just like the lowest rate. Our next story focuses on Ontario housing infrastructure. So finally, the Ontario and federal government have announced a combined $1 billion for housing-related infrastructure. Now, this doesn't mean homes will be built tomorrow or that we will see shovels in the ground for new homes. But what it does mean is that there is funding now available to help eligible Ontario municipalities build or renew roads, bridges, water systems, and to create the infrastructure to support housing. Now, this may eventually help smaller communities unlock new development, but sadly, it does not mean that we will see new homes being built tomorrow morning. Now, this does nothing to reduce the prices in the GTA, and it does not help someone qualify for a larger mortgage. So this may matter over time, but it's important. Don't make a purchase based on government headlines. I mean, governments make all sorts of promises, and it'd be great if they were all true, but we know how government works. Rate check and conclusion. So there was no Bank of Canada rate decision during this week. In fact, they're going to meet on September 2nd. And as for now, the Bank of Canada rate remains at 2.25%. I also found no consequential new mortgage sector requirements, but individual lenders can still change rates, documentation, and lending policies between formal announcements. And here's the bottom line. Lenders are still lending, but household debt pressure is rising. But the right mortgage structure matters more than simply chasing a headline, a temporary payment, or the lowest advertised rate. If your mortgage is reaching renewal and you have high interest rate debt that's piling up, review those numbers before it becomes an emergency. A review doesn't commit you to anything, but at least you can figure out what decisions to make before, essentially, the clock makes the decisions for you. You don't want to be in a situation where your back up is against the wall and you're trying to figure out how to climb out of a bad situation. And let's say your debt is perfectly fine and it's manageable and your mortgage is coming up for renewal. Then again, reach out, let's have that conversation and see if there's a better product for you. I'm George Douzenis, a mortgage broker with Dominion Lending Center's Expert Financial. If you would like a personalized mortgage consultation, visit citysquarefunding.com or reach out. My information's in the bio. And subscribe for next week's mortgage brief. I'll be back with what changed, why it matters, and what you should consider doing. Cheers.